Hey everybody, President Brent here with our Trader User Group Weekly Roundup. This is for the trading week ending 10/17/2014. Man, what a fun week this was. A lot of volatility, a lot of movement both up and down. It was kind of like, those old fairs at circuses where you take the roller coaster ride that was built probably about 100 years ago, and every time you go around a turn, you don't know if that track is going to hold together or not. And that's pretty much what it felt like this week on an old wooden roller coaster. They're fun, but sometimes they can scare the hell out of you. Well, we're looking at the right now the E-mini S&P 500 futures. I got a daily chart up here. You can see that this big, thick blue dashed line, this was the opening price of the E-mini futures 2014. And you can see we spent a couple of days below it, but then we quickly regained it. Now we're coming up to a kind of a moment of truth this week. And it basically, what everybody's going to be looking for was this big down move right here. And then, is this going to be one of these kind of V bottoms where we just take off? Or are we going to come up, hit this overhead resistance right here, which is the 200 EMA, right? And then we're just going to come right back up and come right down again, test the opening price on 2014 and come down and then do another double test down in this area here. Quite frankly, nobody knows. The way the charts are indicating, I would say the odds probably favor us coming back down and testing this level again, perhaps even taking another stab at going lower than this before we resume an upward track. But we're going to have to watch this one bar at a time, and we're going to have to take a look at not only the directional movement, which has got a fairly wide separation between the positive and minus DIs, which tells me we're getting this. This is what this little snapback move looks like. But the other thing we're going to look at is volume. You can see here the last 2 days, Thursday and Friday, we had a lot of volume coming in on the futures there right at the bottom there, which is a good sign. And you can see my moving averages here, the 5 and the 20 on the moving or on the volume area. I've got a 520. So just like you can trade price action in using moving average crossovers, you can do the same thing with volume as well. And you can see the volume has picked up early September, and which is not surprising because right in that area there is when we started that fall down. So volume has been way above normal. And we had a ton of distribution going on here. And then we just had this huge movement right here, almost a blow off bottom here. And then boom, we just zapped right back up. Now we're sitting just here on this 200 EMA. What would make me feel more comfortable? Well, if I blow this up and we take a look at it, you can see right here the 200 EMA is just sitting at 1893.40. On the E-minis, and we would have to take out the high of Friday to be able to pass that, which would give me comfort if we can do that and hold it going into close. This past week, for almost 6 days in a row, a lot of sell orders would come in about the last 30 minutes of close and push prices down, and then that rhythm changed on Thursday and Friday. But really on Friday, you can see here we closed at the upper area of the candlestick. On Thursday, we were right somewhere in the middle. We were up towards here, but it pushed us right back down again. But on Friday, we held. We did pull back a little bit. So we're not really closing strong. There's some selling going into close, but I want to see us take out that level right there, 1893.40, and hold it. If we can hold it, you can see that's a key pivot going over here that was made back in second week in August. I want to see us hold it, and then perhaps we can be sandwiched in here. The 200 EMA will become a flat line, and it'll provide support for us before moving higher. Now, that's what I would like to see. I don't know if that's going to happen. Like I said, I think the odds favor us rolling back over again. I don't know if the selling is done yet. But we're going to watch this. For our members, we got our session tomorrow night. We're going to take a look at the week. We're going to look at things to look at, stocks to look at, and just see how things are going to start to progress here for us. So that's a little bit about what I'm seeing in the E-minis. If we look at the Dow, same thing here. You can see the Dow, but with the Dow now, we're underwater. You can see this deep blue line there. That is where the Dow finished or opened up for 2014. So we're still underwater in the Dow. We just regained it on Friday with the S&P. So, but the Dow, the same process with the Dow. You can see here that the 200 EMA is sitting almost at the opening price the Dow made in 2014. It's sitting right there at about 16,471. And the opening price is around 16,473. So we're fairly close there. We got to regain that and hold that in the Dow as well. Otherwise, what's going to happen, just like the S&P 500 futures, we're going to come up, we're going to challenge it, and then we're going to roll back over, and we may kind of bounce around and then come down and challenge that area down there, or maybe even go lower before we make a final low and then work our way back up. So these are the two areas that we can go, and you don't really know how it's going to play itself out. I think the odds favor it down here, but if we continue to get this bounce and we can take out that 200 EMA right there and we can hold it for a day going into close, then I'll be more cautiously bullish, and I'll start dipping my toe in the water. Okay, so and remember, we got the 50 EMA just doing a hard track with the vectors pointing down. So that would be our next obstacle to overcome in the Dow. If we look at the Russell, well, this thing is just ugly. If you look at the Russell, you can see this deep blue line right here. That was the price, opening price in 2014. You can see just how far underneath we are. In fact, with the Russell, the 50's below the 200. We got a lot of things to do here. And you can see we broke this key shaded zone right here. And it held up very nicely, and we finally gave it up, and we came down very quickly. And we tested that key pivot there, which was right in that area there. We tested it, and now we're kind of moving back up, and we're kind of in this zone again. So again, just like with the Dow and the S&P 500, odds favor us to hit this resistance and come back down, challenge this, and maybe blow through it, and maybe come down and test this area here, which is right in that area there, right around 1,000. So that is kind of how I'm seeing all these markets starting to shake up. Or stack up. The only one that's really been relatively strong is NASDAQ. You can see NASDAQ, you can see the blue line. We're way north of where NASDAQ opened. The NASDAQ, this is the NASDAQ 100 mini futures. Way above the area here. We're above the 200 EMA. We're below the 50, so we're kind of sandwiched in this area here. But just like all the other indices, if this thing rolls, or if any of the major markets roll, this is going to be rolling with it. And we're going to come back down and test this low level. We may even come back down and test the opening price in 2014. Now, the other thing that I wanted to show you guys is the volatility VIX. You can see this thing just going way to the moon, way up in this area here. And as I told you before, in this area here, I was taking out puts. Up in this area here, I was taking out puts. Now we're at this area right here. The odds favor the puts. Now, that doesn't mean that we can't just go blowing right through there and just keep right on going up. But the odds do favor, because the volatility moves in spikes. It's not a gradual thing. This was a very subtle, gradual move that was an indication of something to come. Same thing with that subtle move right there, indication of something to come. But then once you get to this area right here, then bam, it's just all hell breaks loose, and it moves very, very rapidly. But up in this area here, I was telling my members, I was putting out some puts on VXX, because I favored a pullback fairly quickly. And VXX is ratioed to go down. Now, once this thing starts to go down, likewise getting out of the VXX puts, I'm going to flip over to XIV, which is another really interesting trade that our members are following. Another thing that we're looking at, look at bonds, guys. This thing just had a blow off top. I mean, this thing just took off like crazy. Now, I don't think this is done. I did not place this trade, but up in this level here, I know probably a good move would have been to short up in this area here, because bonds just hit. We had on this day right here, we had almost $1 trillion in, I think it was like $965 billion exchanged hands in the U.S. Treasuries market. A lot of this money is coming in from Europe. And from Japan, they're just kind of exiting stage door left in Europe because of the problems that are going over there. We could come down and test this area here, but I think we're going to make another run at it. On that second run, I'll be more prone to want to pick up some shorts. Now, if we don't make that run and we break that level right there, then I'll start picking up some shorts to test this upsloping little zone area here. If we can break that, which is right at the 50 EMA, we're going to come down and test this area right there pretty quickly. But I don't think bonds are going to really give it up as much as people have been thinking for the entire year. Bonds have been strong all year. People thought interest rates would just go to the moon starting in 2014 into 2015, but that's just not the case right now. And let's look at the U.S. dollar. The dollar we've been bullish on, not because the interest rates are up higher, but in anticipation of a rise in interest rates before other countries. You can see the dollar has got that classic move right here where you have this long impulse move or impulse wave, a little bit of a pullback, and then bam, off we go again. And I said I was trading this to the long side and then got out right in that area there. And I said, let's wait for a pullback, and then if we get a signal somewhere in this area here, let's go long. So I'm not long yet, but I'd like to get a signal, and I think we'll probably take that out and come up in this area here, because once they do start raising interest rates, you're going to see the dollar get even stronger. Now, part of this pullback is due to the fact that the Feds came out last week and said, hey, you know, I think we're just going to leave the rates the way they are for a while. Let's get them as low as we can, man. Let's just force money into the equity market. And Yellen gets on and starts speaking about an imbalance, inequality, and income levels with the upper percentage gap between them and the low end and the middle end is just widening. But they've got a lot of responsibility in that, because what they're doing is they're forcing money into the stock market, and only those that can afford to play it are the ones that will benefit more than others. So it's just ironic how they do that. But anyway, side note, that is what I think the pattern's going to be with the U.S. dollar. The other one that we played bullish and then we backed off a little bit is the British pound. You can see the British pound. We were bullish over here in this area. We were bullish. I got out right up in that area there, and then this thing just free fall down. Now, I did not think, quite frankly, it would come down below that level, actually below the 200 EMA, but it did, and a lot of it started right in that area there. It started accelerating when the Scottish vote was coming up. I played this counter trend move right there because I had made a bet that the Scots would vote no and they would stay with the UK, the British Union. They did. It really took off, but then it just started rolling right back over again. So right at that point, I got out of it, and now we've made this. That was like that classic counter trend move, and then a further bottom right down here. Now we're going to have another one of these and then go back down like that and have kind of a channel. I don't know just yet. We've got really good bullish divergence down in this area here. So if we can get across in this area here, I'll dip my toe in the water on the bullish side because I think the pound is a little bit overdone to the downside. However, the euro, completely different story. I think the euro is going lower. Well, let's get it back here. I think the euro is going to do one of those classic moves that the currencies like to do. You got this long move down, you have a classic counter trend move, and then bam, it just goes down even harder. I think that's what we're setting up for the euro. The minute I see a signal on this area, I'm going to take it to the downside. We'll probably take that out, and we'll end up down in this area down here around 1.22. I think the only thing that will save the euro is if Europe itself, the ECB, starts to catch wind and they start to do better and inflation starts to moderate and go up. But right now, inflation's going down. And they can't really lower the interest rates anymore. So the only thing that's going to get the euro down in this area here is if they start doing more stimulus in Europe. And the odds favor that. So that's why I think this is just a false rally right here. If we get a rollover, then I'm going to be looking to sell into that rally. And we'll get the signal for that. So that's kind of how I'm looking at their metals. Gold, I was basically trading neutral on gold here. I had a pretty good volatility was high when gold got down in this area here, so I was shorting gold puts, selling puts on the gold futures way below this area here. But again, just like the currency market, I think this could be a little bit of a dramatic reversal here. I think we can come up and then come back down and test this shaded area again right here. So if we start to get this rollover, I'm going to come up here and go into the futures market and probably do a bear call spread. Out of the money with gold futures because you can get a pretty good premium on it. You can also do GLD as well, but you won't be able to get as far north as you could with the gold futures market. But anyway, that's what I would do. And then if we can just get this thing to move down a little bit and then find some consolidation down here, then I'm going to just do just the opposite. I'm going to do a bull put spread on it. Like that, out of the money, and then I'll be able to get this wide separation right there and just let it sit and let this sucker bounce around a little bit. Now I did that same thing right in this area here, and it worked out nicely, and I'm going to play it this way. So I'm going to be kind of legging into an iron condor, I guess is kind of what I'm saying there. The other thing I've got, and I've still got an active trade on the silver futures right now. I've got a bull put spread on that one, but you know, if gold gives it up, so will silver. I think the downside with silver is less than gold. We got this little movement here, and my system's calculating somewhere down around this area here, around 16.25. I've got a bull put spread on right now at the 1550 area. I think I'm short there a put, and then long a put a little bit south of that. No, in fact, I just did short puts. That's all I did in this one right here. Because I think silver is sometime in the next 6 months or so is going to be up in this area, if not even higher. So this is kind of where I'm sitting right now. But if we do get this movement down, once we get this thing down and we get this, I'm just going to shut my bull put spread down now because I put it on when it was right in this area here. So I've got profits, but not a lot. But then I'll let it get down here, and then I'll just slap this bad boy on again and let it run. Or I may just pick up some calls in this thing. Make a higher return on it. Another one that's really interesting is oil. You can see oil right here has just been the ugly boogeyman of 2014. Oil service companies, pipeline companies, oil futures, it's just been really bad. Now, I put a bull put spread on it, and I was able to make some money in it. Unfortunately, it was because I got out of it before it blew south of the 90 area, and then it just gave it all up. I think oil is going to probably find itself. You can see this move here. I think we may get a little bit of a counter trend move and kind of stay up in this area a little bit, and then it may give it back up again. So I may look on Monday coming way down here around the 70 area in the oil futures market, you know, and then maybe shorting a 70 put, and then maybe going long a 60 put, you know, and just, you know, I don't know if oil will get down in that area. I think we got to have a little bit of a counter trend rally a little bit. It's just so oversold, it's not even funny. And then, you know, it's probably going to give us one of those kind of false moves, come back down, take this guy out, and then form some kind of interim bottom here before it decides to say, what do I want to do next? So that's oil. Gasoline, you probably noticed the pump. Gas is cheap. Well, so are the futures. This thing has fallen off the table. Same thing in gasoline. I think we're going to have a counter trend move. Just like we had this counter trend move here. It comes down, have a counter trend rally. Bam, I think we're going to get another one of those things, and then bam, back down again. So I would be a seller in any one of these kind of rallies. I mean, that would be how I would play that. Natural gas is finding a bottom here. You can see right here, I did a bull put spread on natural gas, closed it down for some profits. You can see right in this area here with nat gas, we've got a little bit of a bullish divergence going on right there as we're just finding our bottom. A lot of this also is on the weather patterns. Everybody's saying that the weather's going to be warmer, but the Farmer's Almanac says it's going to be colder, so someone's going to win out. We're probably going to know in November. We got the death cross there of the 50 EMA crossing the 200 EMA. So if we do break this, though, that's going to be the next support level. I'm going to go check out the bull put spreads and see if I can't get south of that number right there. If I can, in the futures market, then I'm going to do it. You definitely wouldn't be able to get that wide of a separation in UNG. But this is what I'm going to be looking at. It's still the near-term action is down, but I think we're in a consolidation mode for nat gas. All right, everybody, that's pretty much just a real quick update on the markets. Just as a reminder for our members, we got our session tomorrow night. We're going to go through some really interesting things coming up for this week. And for those of you that are viewing this video for free, welcome. Glad you're in here taking a look at what we're doing. Check out our site. We got a lot of things going on. We're having a fun year. And with volatility the way it is now, we're taking advantage of it with credit spreads like crazy, because this is when option traders should be most active. All right, everybody, have a great weekend, and I will be in touch with you shortly. Bye now.